Well, what the heck? Suddenly the markets got incredibly excited about interest rates not rising any further. Let's see what that means for individual stocks. This is forward price earnings ratios, okay? So red means overvalued, depending on your perspective on future likely profitability of these various companies. Now, you should know, I own quite a few of these reds. Microsoft, Nvidia, ServiceNow, Apple, as well. And I come to other Cisco, which is green, which is good. JP Morgan, which is green, which is good. Energy stocks looking relatively undervalued. Now, as I've mentioned in previous versions of this, and have a look at alpeshpatel.com/links. I will look at not just the charts, but valuation growth, revenue growth, momentum, because all of these factors impact stocks. So what kind of week has it been? Well, blimmin' heck, thanks to that massive set of rallies, and look at Intuit over there, thanks to that massive set of rallies, pretty much everything is green except energy. And you might say, well, hey, hang on, shouldn't energy be green if we're not going to have a recession, if interest rates are not going to rise? And it could just be that the market's got it wrong on that one. So don't underestimate that. How about the 1 month performance on exchange traded funds? Well, Brazil continues to stand out, but actually now increasingly other areas, consumer cyclicals, pretty much actually almost everything is looking green. Technology, of course, in particular for obvious reasons. If you're not already looking at the Great Investments program, do have a look, do email us, do contact us. Now, where are we on the Nasdaq? Well, it's at an all-time high. Well, all-time, this year's high. Well, it is all-time high. So it's at the highest point it's been for the year. There we go. Now, I wasn't expecting that in October or November. If you ask me, do you think it's going to go all the way back up there? I didn't think so. So 44% up. S&P up 17. It had peaked at about 19-20%, so it's got a little bit more to get up there. The UK markets up 5.8%. Thanks very much. Right, what are the top stocks? Now, I will have a look at some of these with a view to see if any of them are worthy of special situations. Okay, similarly with the FTSE 350, to see if any of these are worthy of a special situation pick. Doesn't necessarily mean they are, but I will have a look at those. So have a look at my Telegram channel, YouTube, and all the rest of it. I know I say this every week, but it's important. So where are we on the S&P 500? Well, we have most definitely broken out of that downward channel. However, we've done that before here, and it is common for the price then to fall back to the same downward channel before moving upwards. So it would not be a surprise if we went down there and everyone got spooked and thought, oh no, it's a false breakout before we did that. Okay, this is positive, that is positive. What are those things? They are the MACD. I don't use them the way the textbooks do, weekly and monthly. So all rather looking quite positive at the moment. The market has a tendency to scare people though, so don't be fooled. This, the FTSE 100, I expect to go in that direction. All right, and I'll be posting extra stuff on my LinkedIn channel as well. So do follow me on all of those various channels. Now, where's Apple? Similar kind of story. Now, I said the Apple story was, do I buy, in this case, buy more, hold, or sell? Well, we're certainly not selling. Okay, now at the moment, the Apple strategy is buy, all right? Buy. Full stop. So I have bought more, and even if I didn't own it, I would buy. Right? So that's Apple. Alphabet, I've bought more. If I didn't own it, I would have bought because things have turned around a bit. Right? So that's Alphabet. Microsoft, probably my favorite because it's so easy. I mean, this was an awful time, not good, but since the start of the year, it's pretty much been, I guess that was a little bit, but it's pretty much been a one-way bet. And it's really this that gives it away. Okay, so just keep an eye on that. And as long as we don't get into that touch. Remember, I said earlier in the year, I was actually fearful we were going to get to this, and we haven't yet. So it's really good, and I'd buy. Same Apple strategy with this as well, looking particularly attractive. I'll get Amazon. Maybe I'd buy even more Amazon than I've already got, actually. Disney, well, you can see the special situation I've drawn on it, and it is now a buy, okay, because I'm expecting this to happen. Now, look, it could fall back, so it is high risk, but as a special situation, it is in there. But we've got to keep an eye on it over 12 months. So, again, have a look at the Great Investments Program if you haven't already. Nvidia, that's how we've done, and we're at that high And I wouldn't buy more. I would not buy more. This is more a hold. And if it drops, say 20%, sell 50% of it, let's say. Okay, but we can come to that when and if it drops. But I wouldn't be buying more right now. I'm holding what I have. All right, H. Holding what I have, not buying more at the moment. Tesla, as you know, I got out of there, and I'm still out of it. It's as simple as that. Still out of it. I don't like the volatility, and I've got so much other choice. So why would I force myself to get into something? I don't fall in love with companies. Now, Meta, I think it's got limited upside in the short term. In the short term, because this is so high, it could easily do that. So I'm holding, a bit like Nvidia. I'm not selling yet, and I'm not buying more at the moment. All right. ServiceNow, I bought more because I think that's got more room to go higher. All right. Cisco, and so you can see why people's pensions stink. Because they don't own these themselves, and they could have just owned themselves and not charged and not paid a bloody fund manager. All right, and then they would have seen some of those massive gains we saw earlier in the presentation. All right, now Netflix I don't own, but I'm showing it just because it's such a popular company. It's where we are with Netflix over there, and that's the anticipation with that as things stand. Don't own it. Have a look at this. What I want to show you again is this whole point that I make about pensions stinking. Your pension this year hasn't got you 44%. You might as well, it's just one off and it's Nasdaq. Okay, it hasn't got you 17% this year. And that's what worries me. And that's just an index tracker. Now, given that we're cherry picking and some of these have gone up so far this year, like in the case of Apple, from 128 to 188, you're talking, 50% rise actually, 50%. Given that we're looking to cherry pick, that's why individual pensions can, but not guaranteed, to do better. Like I said, have a look at the campaign for $1 million. That will help you as well in your tasks. Thank you all very much, and feel free to email me. We do portfolio reviews for people as well who are not already on the program. The private version of this market update, which is a lot more detailed for my Great Investments Program people, will be on the Telegram channel's private channel for Great Investment Program members on Friday. This public one is public and private. Thank you.